Hey everyone, welcome back. Please make sure to subscribe. Today we're going to be talking about how bad the NASDAQ and the rest of the market can really go down, because right now, if we drop another 10% and we break down below the 200 weekly moving average, every single time we've done that, it's led to a horrible, and I mean horrible result in the market, okay? We're currently about 10% away from it now, getting closer by the second, it looks like, as we finish off this week and close down below these important Fibonacci levels. The last two times we broke down below this level, let's go over that very fast. 2008 financial crisis, as soon as we broke down below it, we came down 41%. 41% the NASDAQ, quite a bit here. And the time before that, the big old dot-com bubble, as soon as we broke down below that, we came down 63%. And if you just zoom out a little bit here, guys, what we've been looking at has been a lot more like this and not so much like what led up to the 2008 financial crisis. So it's been much more aggressive. You guys can just see it like this. You know, we've had some really crazy growth without any major drops for a while. We may be due for something a little bit larger here, so you guys have to be prepared for that. Now, the one thing that will make you guys some easy money in here, and I do mean easy money if you guys have the cojones to kind of stand up and, make the trades, you'll notice that on every one of these times that we come into contact with the 200 weekly moving average on the first attempt, we actually bounce up for a few weeks. In this case, it was 1, 2, 3, 4, 5, 6 weeks of bouncing above it for the dot-com bubble. Over here for the 2008 financial crisis, we had about 175 days of being above it. So that was a nice bounce as well before we ultimately had that big move down. And right now, we could always just have another bounce, come back up here, have a little bit more of a bear market rally, and then really tank down further over the next few months. And that's going to be a big if. We have to have faith that the Federal Reserve can fix the problems and that gas will not go up to $6 a gallon. If gas goes up to $6 a gallon because of increased demand during the summer and China coming out of a lockdown, really bringing the demand of oil back up, that's the wild card that nobody's really talking about right now. If that happens, imagine if you are on a fixed income, how are you driving your kid to school $6 gallon of gas? How are you driving to work with $6 gallon of gas, especially if you don't have any friends and you don't want to carpool people? How are you going to do these basic things here, guys? It's going to make it a lot worse. You may see civil unrest, and that may lead to the market really coming down hard, especially if everybody cannot afford to go to work. What do? Not everybody has an office job. A lot of people work at grocery stores. They work at a lot of places that require you to drive out there, especially in rural America. If things get so bad, you could really see the market drop down below this 200 weekly moving average. I'm sure we're going to have a bounce, so the first attempt is going to be fine. But whenever we do break down below this level, guys, you guys must have some type of plan. I am still working out my plan, so I don't expect you guys to have a plan out as well. But you guys got to be very careful about this level, because every time we break down below this 200 weekly moving average on the NASDAQ here, it just does not bode well for the market overall. Okay, that's it. Have a nice day. Make sure to subscribe.